Welcome back to the Community Corner podcast, where we explore the companies in the S500 through the lens of behavioral finance. I'm Arnav.
And I'm Nikhil. Today, we're focusing on Transdigm Group Inc, a leading designer, producer, and supplier of highly engineered aircraft components. Transdigm's products are used in commercial and military aerospace applications, making them a critical player in the aviation industry. We'll be discussing how behavioral finance impacts their decision-making, diversity and inclusion efforts, adaptation to different markets, and how they compare to other companies in the industry. Let's get started.
Transdigm Group has been a significant force in the aerospace components industry for years. From a behavioral finance perspective, how do biases like the status quo bias and overconfidence influence their decision-making, especially in areas like product development and acquisitions?
The status quo bias is particularly relevant to Transdigm's approach, especially in how they manage their product portfolio and business strategy. The status quo bias refers to the preference for maintaining existing conditions rather than making changes. Transdigm leverages this bias by focusing on continuously refining and optimizing their existing product lines, which are essential to the aerospace industry's reliability and safety standards. This approach ensures that Transdigm maintains its reputation for high-quality, dependable components, which is crucial in an industry where precision and consistency are paramount. Overconfidence also plays a significant role, particularly in how Transdigm approaches acquisitions and market expansion. Overconfidence refers to the tendency for people to overestimate their abilities or the success of their strategies. Given Transdigm's history of successful acquisitions and market dominance, the company's leadership might exhibit strong confidence in their ability to continue expanding through strategic acquisitions. This overconfidence can drive Transdigm to pursue aggressive acquisition strategies, expecting to generate significant returns by integrating new companies and technologies into their existing operations. While this can lead to growth, it also poses risks if Transdigm overestimates the synergies from acquisitions or underestimates the challenges associated with integrating new businesses.
And this focus on leveraging the status quo bias and overconfidence has helped Transdigm maintain its leadership position in the aerospace components industry, appealing to both customers and investors who value reliability and growth potential.
Exactly. Transdigm's strategic use of the status quo bias in maintaining their core products and overconfidence in pursuing acquisitions appeals to investors looking for a company that balances stability with aggressive growth strategies. However, this approach also means that Transdigm must carefully manage the risks associated with market changes, integration challenges, and regulatory scrutiny, particularly as the aerospace industry evolves with new demands and technological advancements.
Let's talk about diversity, equity, and inclusion at Transdigm. As a major player in the aerospace industry, DEI is particularly important for Transdigm. How does this intersect with behavioral finance?
Transdigm's approach to DEI is crucial, especially as the company operates in a global and highly regulated industry where inclusivity can drive better decision-making, innovation, and employee engagement. From a behavioral finance perspective, strong DEI initiatives can enhance Transdigm's ability to innovate and adapt by fostering a culture that values diversity and inclusion. A commitment to DEI allows Transdigm to attract and retain top talent from various backgrounds, which is essential for maintaining its competitive edge in the aerospace industry. For investors, Transdigm's focus on DEI can signal that the company is socially responsible and aligned with modern societal values, which can enhance its reputation and appeal to ESG-focused investors. Additionally, DEI efforts can help Transdigm build stronger relationships with customers, employees, and communities, reinforcing its brand as one that values inclusivity and ethical leadership.
Investors are increasingly considering DEI when evaluating companies, especially in industries like aerospace, where the ability to foster inclusivity and innovation is critical to long-term success.
That's right. By embedding DEI into their corporate culture and operational strategies, Transdigm not only improves its ability to serve a broad range of stakeholders but also strengthens its market position and attractiveness to socially conscious investors.
Moving on to market adaptation, Transdigm operates in a highly competitive and technologically driven industry. How does the company adapt to changing market conditions and technological advancements, and what role does behavioral finance play in this?
Transdigm's strategy involves continuously adapting its product offerings, manufacturing processes, and business models to meet the evolving needs of customers and technological advancements while maintaining its focus on reliability and innovation. From a behavioral finance perspective, this adaptability is crucial for managing the risks associated with market volatility, technological advancements, and shifting customer demands. Transdigm's ability to understand and respond to new market trends such as the increasing demand for more efficient and lighter aerospace components, the rise of electric aircraft, and advancements in digital manufacturing allows it to stay relevant and competitive. By using data analytics, customer feedback, and market research, Transdigm can identify emerging opportunities and adjust its strategies accordingly, helping to mitigate risks and capitalize on new opportunities in the aerospace components market.
And this adaptability is essential for Transdigm, especially as they face competition from other aerospace suppliers and the growing demand for more advanced and efficient components. Their ability to maintain their brand's relevance and leadership in a changing industry is key to their continued success.
Exactly. Transdigm's focus on understanding market dynamics and adapting its strategies accordingly allows them to remain a dominant player in the aerospace components industry while staying ahead of emerging trends and challenges. However, this also requires them to be proactive in responding to changes in customer expectations, technological advancements, and competitive pressures.
Now, let's compare Transdigm to other companies in the aerospace and defense sectors like Raytheon Technologies, General Dynamics, and Lockheed Martin. How do the behavioral finance dynamics differ?
Transdigm's dynamics are often compared to other aerospace and defense giants like Raytheon Technologies, General Dynamics, and Lockheed Martin, particularly in their approach to innovation, market expansion, and competition. Transdigm's strength lies in its focus on highly specialized aerospace components and its aggressive acquisition strategy, appealing to investors looking for a company that balances operational excellence with strategic growth. Raytheon Technologies, with its emphasis on integrated defense systems and commercial aerospace, appeals to investors interested in a company that growth and global reach. General Dynamics, known for its leadership in defense systems and information technology, attracts those looking for a company that is driving advancements in military technology and cybersecurity. Lockheed Martin, with its focus on aerospace, defense, and advanced technology, appeals to investors interested in companies that integrate cutting-edge technology with defense solutions. Transdigm's behavioral finance dynamics are shaped by its reputation for specialized products, strong market presence, and adaptability, making it an attractive option.
And unlike Lockheed Martin, which focuses heavily on defense systems and aerospace solutions, Transdigm's strength lies in its specialization in high-performance aerospace components, appealing to a different type of investor and market.
Absolutely. Each of these companies has its own behavioral finance dynamics that influence how investors perceive their value and potential risks. For Transdigm, the focus on specialized aerospace components, aggressive acquisition strategies, and market adaptability provides a unique value proposition in the aerospace industry.
To sum up, Transdigm's approach to business is deeply influenced by behavioral finance principles, whether it's through their acquisition strategies, adaptation to changing market conditions, or their approach to DEI. But like all companies, they are still subject to the biases and perceptions that can influence investor behavior.
That's right. Understanding these dynamics provides a clearer picture of what drives Transdigm's stock price and where the potential risks and rewards lie.
Thanks for joining us on this episode of the Community Corner podcast. Until next time, I'm Arnav.
And I'm Nikhil. Stay curious and keep questioning the narratives.